Hi, everyone, and welcome to the BFM Personal Finance webinar. It is now 8 p.m. Sorry, it's 8 p.m. in the evening right now. And today we're taking a look at the targeted loan moratorium and the concerns that are coming around as it comes to, as the blanket loan moratorium comes to an end. Now, like our other personal finance webinars, this is done in collaboration with the Financial Planning Association of Malaysia. So a big thank you to our partners there. Now, the concern I think here is about one, your eligibility for the targeted moratorium and how you get it, and two, what do you do if you're not eligible? And we're going to go through a series of situations today. And to help me on this evening's webinar, I have with me Nirmala Subramaniam, manager at the Financial Education Department at the Agency Counseling dan Pengurusan Credit, more commonly known as AKPK. Samantha Yeoh, a licensed financial planner with Vantage Advisory, and co-moderating this with me is Malek Ali, founder of BFM and filife. And to the three of you, please join me on camera here. And to the audience, to anyone who's watching this, if you've got any questions, please let us know. Put them down in the Facebook comments. We are more than happy to address as many as we can. So the question right now is, we are now entering, or we are going to enter, the targeted moratorium, which is going to address those who've been hit with salary cuts this year and job cuts, and who've lost their jobs. So it's more targeted. It's no longer the blanket automatic moratorium that we saw 6 months ago. So I think, Nirmala, let's start straight from an AKPK point of view. Maybe you could take us through the targeted moratorium. How does one apply for it?
Right. Thank you, Roshan. Thank you for having us. Thank you. Hi, Sam. Hi, everybody.
Hi.
All right. Okay. Talking about the targeted moratorium, yeah, it was announced recently, and basically is for the affected groups. Yeah. So we have those who have lost job in 2020, and for those who are experiencing pay cut. We also have another thing called the repayment flexibility scheme, which is targeted to those who are not in this category but are still facing financial problems, where they can enjoy probably just to pay on interest, just to service the interest, or to negotiate on an extension of tenure, and or other initiatives. And so there are a few things that are offered to the affected group, and how do they go about it? Currently, has the earlier announcement was made, it was done automatically. So now we are requesting the clients, the borrowers, to actually contact their financer back, and they were supposed to contact their financer right after 7th August, so that was last Friday, and to negotiate and see what can they do. Yeah, this is specifically for those who are affected. So what we are trying to tell people here, I mean, something that we often see is sometimes they are not directly affected, but they could be indirectly affected. So if I were to take an example of an household, I'm taking like a husband and wife. The husband is working in the government, so most likely he takes up all the loans, and the wife is in the private sector, and she's affected. She has a pay cut. So, but in terms of loan, the husband will not qualify for this targeted moratorium, yeah, and because he's still employed, you know, he's not experiencing anything. But in terms of an household expenses, they will face problem, because in terms of household income, it has reduced. So in this scenario, they have to analyze. Okay, they have to analyze the situation and see, okay, can they go for the repayment? Can they go for the flexibility part of it? Can they negotiate to extend the tenure first? So in order for them, you know, so that they can afford to pay. Or they can even come to AKPK and we can still negotiate on their behalf if they do not fall under that direct category. So they need to sit and analyze, not necessarily I just fall in this category. If I'm not in this category, I'm gone, and you know, nothing can be done. No, there are a few options offered here. Yeah. So, but the most important thing is contact your financer, call your financer. There are various ways. Most financiers have actually reached out to their clients already. They have sent SMS, they have called. They also, if you go to their website now, you will see their links. They've provided links for you to actually apply if you really need the moratorium, the targeted moratorium, for you to actually state, are you going to continue to pay or not? So they have already started, yeah, and be in contact. The other thing is, if you have decided to continue to pay, also do check on what is the amount you're going to pay now. Yeah, there could be a difference on certain loans because there's two options. It's either, you know, the months that you have deferred the payment, the 6 months, that payment may be taken in and divided over the remaining 10 years, so your monthly installment can go up. Or they would extend the tenure for another 6 months, so your monthly installment stays. So that can you can look into these two options, which most of the financiers are offering. But the most important thing is contact them and see what is the amount that you're going to pay. What is the amount? If you can actually start paying now, then just continue to pay. There's no issue to it. They are welcoming that as well. So it's more about you knowing where your situation is right now.
And so a few things I think to take note there is, one, it's not automatic anymore. You have to contact your financier, whether it's online or call them. Just find out a way to make sure you get in touch with your respective financiers. And two, pay attention to how much you're paying. What is the amount you're going to be paying? These are the few factors you need to pay attention to there. Nirmala, before we jump over to Sam, are there any misconceptions out there around the targeted moratorium that you'd like to address now? Is there anything that, you know, people are saying, they're talking about, but aren't necessarily true?
Many things. First and foremost, just remember it's no longer automatic, and it's not a free money. You're just deferring the payment. It's not that you're not going to pay. You're going to pay, but maybe at a later point of time. And also that it's not. I wouldn't say all loans are totally free of additional costs. There is additional cost, so please remember. The other thing is that many of them thought that it's okay if, even if I can afford to pay, it's better if I take the moratorium now and save whatever cash I can for the amount, which is okay. It's an idea. I mean, it's something positive that we want to do. But what we are worried is, please do not start any other commitments that during this period, and so that eventually when October comes, it might be a bit too difficult then. And the other thing is, let me look at the problem when October comes. Yeah, so that's something that we don't want them to do. Please look at it now and see whether you can afford to pay. Don't wait to October. Don't use the concept of I'll cross the bridge when it comes. No, not in this aspect. So we don't want you surprised at your own finances by then. Yeah.
So this cash surplus that you may have had over the last few months is not, it didn't come out of thin air, right? It's not free money. This was previous commitments that have been put on hold in a bid to help give you a bit of breathing space during this time and during this uncertainty, as we're all managing the pandemic in our own capacities. Sam, let's go over to you now. From a perspective as a licensed financial planner, what are some of your thoughts on the loan moratorium as we move towards the targeted moratorium? Have there been any concerns that have popped up?
Like what Nirmala mentioned just now. So first thing first, you need to understand where is your real problem first. Like example, targeted moratorium is a temporary solutions, which if let's say you are fall under the first two category is pay cut or jobless right now, there is an extension about 3 months that you can work on, or you can actually further negotiate with your banks. But perhaps ultimately you must know that how long with the current situations it's happened to me, how long my existing funding can last. This is the most important thing that I see. There are a lot of people still do not have this awareness on it. Yeah, they still hope that there is an extension, more and more extension on moratorium. like what Nirmala said, this is not a free money. There is a cost structure behind on everything that you plan for. Yeah. So at the same time, during our MCO, we started to be able to meet up with most of the clients. Then there are two groups of people we found out that in terms of how they look at moratorium. The first group is they have a pretty good awareness. They keep the money in as cash to prepare for the worst situation. What we call is they foresee that there is a job security issue in future after the post-moratorium. Okay, so and second group, they are still very positive, very optimistic. So they opt in for moratorium. Then they take some of the money, go for investment. And I actually experienced there's one actually putting in that payment as a down payment to buy a new car. Yeah. So that's happened to our society right now. Yeah. So this is the concerns that I would like to highlight to most of the people. Let's prepare for the worst, in fact.
I think this is one of the side effects of having more cash in your bank account, right?
Yeah.
You just see that there's a bit of money there, and there's some tendency for some individuals to spend that money. And then now we're also seeing that incredible rally in the stock market now, in the Malaysian stock market, to be specific, and how much retail investors have come back into vogue right now. Malek, before we move on to the different types of groups, is there anything that you've personally observed from your view, from your vantage point, any of the things that you'd like to highlight before we get into the different groups of people affected?
Yeah, so I have seen on the last point about, I have seen people talking about, hey, I like to invest now. The appetite for investment is high. And so I see there's a lot of bravado I see on social media about investing, taking advantage of the situation to invest. And I think that's a bit dangerous because your time horizon is only, you're going to come back. I think the original idea of this moratorium was for you to give a bit of a relief. I think that I think we should stay true to that spirit. And even if you take advantage of it, I think it's better to sort of, it's better to keep it as like, saving it for just the uncertainty that's going to happen afterwards, right? We're not going to come out of this year is a washout year. There might be businesses are also given moratoriums, loan moratoriums as well. And when those expire, and they will expire on 30th September, they might really go out and say, sorry, we've done the numbers, and you're without a job. And if you had taken that money, instead of keeping that money and building up your cash reserves, your buffers, and actually you use it for the stock market, whatever it is, great if the market's going well. But if it's not doing well by then, and that could happen, then you're stuck, right? You do not have a buffer. So I think for those who have taken advantage of moratorium, I think it's just be prudent about. My suggestion is just to be prudent. Create a cash reserve in case something does happen in the second half of the year. We're in the second half of the year, but if things go worse, I think that businesses are ailing right now. So there we are.
Yeah, I think there's a few points to tie up from all three of you, right? So one is like, don't use that cash to commit to anything right now. It's a reserve, it's a relief. It's meant for you to build a little bit of a buffer so that, if the next few months get tougher, you have something at least to rely on there. And Malek, I think that's such an important point you brought up, that businesses have been given reliefs also and loan moratoriums, and this come due again in October. So if you personally are feeling the pinch on your part, businesses could also be feeling the pinch, especially if we don't see demand back, which could mean job losses, even more job losses further down the line. These are all, of course, will have to remain to be seen, but these are just risks that everyone should just keep in mind. Now, if you've just joined us today on this edition of the BFM Personal Finance webinar in collaboration with the Financial Planning Association of Malaysia, we're taking a look at the targeted loan moratorium and the ways you can manage the situation if you're concerned over your loans coming back if you're not eligible for that targeted moratorium. And joining me today, I have Nirmala Subramaniam of AKPK, Samantha Yeoh of Vantage Advisory, and co-moderating with me, as always, Malek Ali, founder of BFM Radio and filife. Right now, we're taking a look at primarily there are three groups that we want to talk about. Those who've had pay cuts, those who've lost their jobs, and then those who could lose their jobs. That's the 1, 2, 3, 4 months down the line. We're still in a very uncertain environment. Nirmala, let's start with you. If I've suffered a pay cut at this juncture, I'm eligible for the targeted moratorium in the proportion of how much I've seen my salary being cut. What kind of help can I get from AKPK during this time? Is there anything that AKPK can do for me?
Okay, at points when a person has too many loans, like you have 5, 6 banks, you know, and for you to go and negotiate to every bank, every one of your financier could be a little bit troublesome and could be a hassle, and you may lose track of your finances in a holistic manner. So when you come to AKPK, what we look at in totality. We see what's your total outstanding, how many places you owe, and where you owe, and in terms of your budget, we help you to look at your budget, because sometimes when people are so desperate to pay up their loans, they do a very, I would say, not practical budget. You know, sometimes they would just allocate, oh look, I'm just going to eat 300 ringgit a month, and then the rest I'm going to pay the loan, which is, they will not sustain. There will not be a sustain. They can't sustain in this manner. So it's only going to be a 1 month payment there, and then thereafter it's going to be a default again. So what we try to look at it is, like, we try to see as in whole what's your spouse, what's your income. We see how you can readjust and do it better, and how you can actually pay up your loans. Because there was a recent survey, I cannot remember the source right now, but what it said was that people who had pay cut actually had more stress compared to those who lost their job. So in terms of when there was a pay cut, they actually suffered more stress, because I think probably they had all their commitments still to pay, and you know, they could not renegotiate. Because at AKPK, even prior to this MCO, for those who were affected, who lost their job, who had retrenchment, who were affected by that, we were negotiating on postponement of their repayment for a long time. So we had that capacity to actually negotiate with the financier to get a postponement for 2 months, 3 months, and subjected, they gave us the proof, like okay, there's a retrenchment letter, there is we check on their EPF, we ask them their statement, there's no contribution, so we know, okay, yeah, he has lost his job, so we can negotiate with the financier and get a certain months of postponement till he get another job. So we have been doing that since day one. So in this aspect, we are also still here. And also, the automatic moratorium was actually given to those account which is performing. So once if your account is a non-performing, which is 3 months and above, you have not made payment, is that the default? They do not qualify for the automatic moratorium. So in these cases, this group of people, we were still assisting them. We negotiated and we asked for a moratorium if we really do find that they are not in the position to pay yet. You know, they have problems. So these are the things we do. And so for a person who has pay cut, what we can help them is to look as in a totality, to negotiate, to see. And also at AKPK, we have this synergy, we call a social synergy, where we have other partners who are with us. Because you see, we can talk about managing, but at the end of the figure, where does the income come from? I need to manage and I need that income. So when I have the right income, I manage it well, and that's where it works out well, right? But if I want to manage, but there's no income here, so what do I do? So that's where we have this synergy where we have established with SOCSO, we have with AMDAC, we have with Giat Mara, a few other organizations where, for example, if this guy comes to us and we know income is an issue, so we can actually now refer him to AMDAC to get additional training so he can start something online. He can go to Getmara. We have other agencies with us, yeah. Or if he's eligible to SOCSO's allowances, then yes, we have a direct thing that we will submit the names directly to SOCSO. Okay, so it works vice versa. For example, if a person goes to SOCSO and the officer would actually look at it and say, oh, okay, you have that problem, you should go to AKPK, we'll send you that. So we have this synergy build up. So we're actually trying to build this synergy bigger getting in more players in us so that we can help them not just to manage but also to resolve and to sustain. Actually, now we are looking for the word of sustainability, which we all heard and learned a very valuable thing during this MCO. We learned that nothing stays, nothing is permanent, you see. So this is something that we are looking at, and to see how much more that we can actually help.
Yeah, I think Nirmala will get into more of AKPK's role, especially if things get a bit worse later on in the webinar. But it's essentially, I think we've had this conversation before. You don't have to wait till it's too late before you go out and reach out to AKPK and have that conversation. If you're concerned over mounting debt or concerned over your ability to pay, have that conversation. Just start the ball rolling, because they can direct you to different places if that's not if there is a concern there. Sam, from an LFP's point of view, beyond any help that AKPK can provide, how do people who have salary cuts need to prepare for this situation?
Okay, so basically, we, as a licensed financial planner, what we are advised in terms of the urgencies is to look into 3 different areas. Okay, the first thing first is your cash flow management. Yeah, the cash flow management is your hard impact on your financial. So first, everything have to back to basic first, need versus want. Then also you need to look into where are your expenses actually goes the most. Example, beside the loan, in the basic living, like what we see that middle age group with 2 or 3 kids in as a family, those income family, so they actually spend quite a lump sum of the money. 20 to 30% of some of the expenses go to their kids, like a daycare, okay, a daycare, and also the talent class for the kids. So if we able to actually look into this to solve the problem first, then we will actually able to reduce the cash flow management in terms of the basic living. Then the next thing is we need to look into the moratorium amount that you can actually put aside to prepare for the worst scenario as an emergency funding. Other than that, there are 2 main issues that the main 2 areas that we need to look into. That is, first is restructuring your investment asset. Yeah, so for maybe some of the people, they have putting in some in equity or stock. Let's restructuring everything from a more aggressive portfolio to a very low risk like fixed income to prepare for the worst. Yeah. Then the third thing is some of the people, they putting in quite a lump sum of contribution into their risk management, which is insurance. So what we can do is we need to actually pay attention to check how much cash values on all my policies all in hand. And also, what is the worst is if, let's say, I would like to take the auto premium loan from the policy. So let's prepare all the figures in hand first before the worst is actually coming in terms of the group of they having a pay cut right now. So if all these things, after you have done all this, if the worst is still insufficient, the next thing is you need to go to seek for help from Nirmala, which is AKPK. Yeah.
Yeah, Malek.
There's also one more thing, I think, Sam. I think you earlier you mentioned before about home equity, right? So and EPF, your EPF account too. There is something that you can do as well. If you have a pay cut and you can't make ends meet, what can you do with your EPF account too?
Okay. So in this scenario, let's say this person have pay cut, have insufficient emergency funding, the basic living expenses not even actually can cover. So another source of funding, the last choice, like you can actually work onto applying EPF accounts to funding to cash out to since you are in the moratorium situations, then you actually cash out to actually stand by to cover your basic living expenses or your emergency funding. Yeah, this is the last options before you move on to the worst scenario.
Yeah, how would that, what circumstances would EPF allow you to take out money from account 2?
First thing first, you must own a property. Then you still need to serve the loan. So the process is you need to actually get the letters from the respective banks that you own. You owe the loan, then we prove that how much is your outstanding and how much is your monthly installment payment, then you get application into EPF. So I think within a week's time, they will actually get the approval. So you can actually opt in for 2 different options on payment on monthly. First is either you pay direct to the bank, or either you actually can receive the funding directly to your bank accounts. So these are all the another options that you can work on.
Yeah. So in both cases, I think you are, if you pay directly to the bank, that means you're reducing you're paying your mortgage payments through this, through the amount that you get from EPF. So that reduces your outgoing. So that helps. The other way is that you still pay, but you pay yourself first. You pay into your own bank account first, and then you pay your mortgage, right? That gives you a little bit of flexibility to park the money, not park the money, but pay other things and all that kind of thing.
Yes. So the good part is if you can actually work onto this option with specific durations. Let's say you already know that what is your projection in terms of a cash flow. So at least you can opt in for about 6 months or 12 months. Then you can stop for this plan. Then you can reserve this fund back to as your retirement funding.
Okay. What's the maximum number, the period that you can have, that you can opt to do this? For example, for your loan to be paid by for your EPF account too?
It is subject to how much balance of your funding have it in your accounts too. There is no limit.
There's no limit, but so long as you can utilize it all the way until 0, is it?
Yeah,
okay.
You are right.
Right, but I guess what you must counsel your clients not to do this, and this is as a last resort, right? Because this is your retirement. Right. This is your retirement savings.
The worst scenario, we will opt in for this. Yeah,
but you have a lot more other things you can do before this, right? So cash value of insurance policies, minimize your expenses, take the extra 3-month moratorium. If you have your pay cut, apply for the thing, negotiate with your banks. And then only last, right? Only last you do your EPF account too, right?
And another one thing I would like to highlight, most of the people when they are in stress, right, they do not open out and discuss with the family members. Like what Nirmala said, sometimes spouse, you need to let your spouse know your situations as well. Okay, so at least the spouse will have the understanding, or your parents will have the understanding how they can help you in terms of going through these tough situations. Maybe like example, some of the people, there is a fixed parent support required to pay every month 800 to 1,000. But let's share with your parents that you have this difficulty. So temporarily, you may actually cut down from 1,000 to 500 ringgit. So at least that 500 ringgit, you can actually channel to cover others' expenses as well. So the communication have to be open so that you won't get stressed and lead yourself into the worst situations. Like example, some of the people will go into loan shark. The worst lah. Okay.
Yeah. Don't go there.
Don't go there.
And if you got any questions, you please let us know down in the comments section down below. We're more than happy to take a look at them. And if you've just joined us, welcome to the BFM Personal Finance webinar today, this evening, in collaboration with the Financial Planning Association of Malaysia. Today, we're talking about the targeted loan moratorium and the impacts that some could face who are not eligible for the moratorium, and how you apply for it. We've talked about the application process already. Right now, we're taking a look at different groups that are impacted in different ways. You can always let us know your questions down below. And yes, Malek, joining me, Malek, Samantha, Yeoh, and Nirmala Subramaniam.
We have a comment from Robin Lee, who said something. I think he's picking up of this is off Facebook. He's picking up the point that I think some people do take the money to take advantage of moratorium to invest, and I guess he's just pointing out just know what you're doing, because right now there's a lot of what he called momentum investing. And but you got to know what you're doing. If you're smart and you know what you're doing and you know how to turn this around within 6 months, or you can make money within 6 months, fine. But if you don't, you're just jumping into it, then you might be in for a very bad fall. So that's that's what Robin had to say. So just to highlight one of the comments that we had a little bit about investments.
Yeah, so just a bit earlier, we were addressing the salary cut situation. So that's, I think, the first level of the situation. Of course, the more drastic one is that if you lose your job. Now, if you lose your job, you're entitled to the entire, or you are eligible at least for the entire targeted loan moratorium. I think, Sam, let's just talk about, so earlier you addressed quite a lot of concerns there. Is there anything that differs for someone who's been impacted by a job loss that differs from the salary cut situation?
Yeah, basically on this group of people, right, when they have job loss, the first thing first is most of the people, they will react that they will find a new job. They were only focusing on finding a new job. But what they are lacking of is in terms of consolidate their financial in a holistic view. So first thing, as I say, I mentioned just now, you need to know that where are all your cash coming in. So you need to do the projection. If let's say 3 months down the road, I couldn't find a new job, how long can I sustain? Can I sustain for 3 months, 6 months, or 9 months? So at least first thing first, you have a peace of mind on this part, okay? So that you can able to focusing on your energy to find a new job. Yeah. So what are the action that you need to do? First thing first is the immediate cash that you must have in hand is your liquid cash. So where are your cash coming in? Is it in slipping in the investment vehicle? Then what you need to do is you need to make a decisions to cash out or maybe switch to the portfolio that with the lower risk, which is like a fixed income, a money market or bond investment as well. So secondly is, as I mentioned to you just now, that in terms of the insurance money as well. So there are two areas that we need to work on. I can't afford to pay. So have you really applied the moratorium? The insurance company also have a scheme that allow you to apply premium holidays on that, but you need to pay back later. So what are the things that you can do in order for you to do not actually stress out on paying the premium? Secondly, there are some of the plan, in fact, you can apply premium holiday on that. So you just stop paying on your premium, get the cash value slowly, help you to cover the monthly premium payment first. So these are all the small little actions that you must pay attention first before you are able to actually focusing on get a new job. So another part that you may need to review, you may need to actually focusing on your expectation. What I mean expectation in terms of new job. Example, some of the people actually is still very choosy in terms of the job that they are seeking. So what we need to advise is maybe you need to start with, if I can get the part-time, I start first. Then while working on the part-time, I have a basic income coming in to cover my basic expenses. Then I'm still looking for others permanent job. So these are all the area that for job loss people, you need to actually pay attention with. Yeah.
Right. Nirmala, we've actually got a question that came in through Facebook from Harry Chung. During this times, we are getting, I think this is from his perspective, he's getting various calls from third-party loan consolidation agencies that want to, in quotes, help them. Is a bank allowed to appoint such an agency? And if not, what is maybe your advice for being more alert here? Is AKPK the only authorized government agency for loan consolidation in this time?
Yes, we are. Yes, we are. The banks do not appoint consolidation agencies. They appoint collection agencies to collect, but not consolidation agencies. So if you do receive a call from somebody who says that, look, we can consolidate all your debt and there is a fees to it, which is normally a certain percentage out of your total outstanding, please do not just come to AKPK. We are free of charge to the public who come to us. There is no payment for AKPK. Whatever payment you're making is for the financial institution, for the bank. So we will be collecting your payment and we will disperse to the bank. So we make it even more easier because you don't have to go to every bank. So there is no consolidation. I know there are a lot of people who receive calls, especially at times like this. And they do tell you that, okay, come to us, it's much easier, we will definitely get it approved. Bear in mind, the loan is given by the financier, so only he or she has the authorization to actually say, the right to actually say, okay, approved or not approved, you know, so nobody else can actually really get it approved and things like that. So there are a lot, so please be careful and deal with us at AKPK.
I think it's also I think you brought it up earlier, but AKPK is free of charge. I think this
Yes.
is something that is very important to highlight. It's something we brought up in previous conversations. There are no agents who are going to charge you a fee for AKPK services, and just keep that in mind. I think during this time, there are people who are, the scam numbers have increased. Police reports have also increased in tandem. This is definitely something to be cautious and wary about. Now, taking a look forward, the other concern is going to be from groups of people who haven't suffered any job losses, who haven't suffered any pay cuts, but could do so in the future. And relating back to what Malek mentioned earlier in the webinar, it's about the fact that businesses could go under a little bit down the line if once loans start kicking back in. So Nirmala, is following up from your previous point there. What are some of your concerns or AKPK's concerns about the groups of people who aren't eligible for the targeted moratorium? Could you shed some light there?
Okay, there are many out there who aren't eligible at the moment, but you need to understand your actual situation. I totally agree with Sam to say that cash flow is, analyzing your cash flow is very important at the present. You have to focus more on inflow rather than outflow now. So focus more on what's coming in rather than what you're going to spend. So we always at AKPK, we tell that, okay, first and foremost, you need to know your situation. So do your debt to income ratio calculation to see how many % of your salary you're actually using to pay up your debt. So if you take that from in your monthly salary, if more than 40% is used up to pay for loans, that means, let's say 60% of your income is used to pay for loans, then you only have a balance of 40% for your living expenses, which is most of the time will not be sufficient for you to sustain, unless there are other supports. So you need to analyze the situation. So you need to analyze, okay, what is your status like now? How much do you have? So these are those who are not eligible. So you need to know first, right? Then we always talk about this 4A. So first you admit that there is a problem. What we always see is people fail to admit until they come to the very last resort. So a normal way of getting out of debt is actually creating another debt. So I can't pay this, I go and open up another debt so that I pay this off. Then I keep digging new holes to cover old holes, and there's no never ending. It becomes a never ending story, but not happily ever after. It's just never ending. So we say admit first, analyze. The second A is analyze your situation. So do your cash flow, look at see how much you can pay. What's your addition? Based on looking at where do you get your income from at the moment. So there are various ways. If you're not getting a salary, what are the aids that you're getting? What are the help that you're getting? Are you withdrawing your EPF money? Are you looking at that? Do you get allowance? So list them all out. Okay. And then analyze your expenses. Prioritize expenses here is very important here. Cut down unnecessary expenses and look. So here people have problem. What is unnecessary and what is necessary? So you have to know what is necessary and what is unnecessary. What you can live, what you really need for your livelihood, food, shelter, right? Basic transport. So look at it, and then cut down whatever you can. That's something that you have to look at. So analyzing the situation, seeing how much of debts you have. Then we go to the third A, which we call act on it. So no point analyzing and hoping for something to happen on its own. So you've got to take the action on it, act on it. So go talk to your banker, talk to your financier, see how you can restructure, refinance, seeing how Sam says, whether meet people like Sam, say, okay, what can be done here, act, on that. And also act on the other part. I like the part Sam says, not just look at this, but also look at how to upskill yourself. Because you really need to think differently now. Everything is being done differently. So what are the other options for you to increase your income? Expenses are there, you've minimized to the max, that basic. So what are the ways that you can actually earn some additional income? So here, act carefully, because as you mentioned, Roshan, scams are on the rise. Sometimes we want to make money. So with the little balance that we have, we went and invested or started up some online business and thing, and you know, it went wrong. So you lose everything. Yeah? So please be very careful with scams. It's really on the rise. Yeah. We even had masks, even initial days of MCO, I think selling masks also became a scam, that Facebook actually blocked the word mask, sanitizer. It was all on high alert actually, you know. So be careful, look at the right websites, yeah, go to authorized websites, check up with a few people. If somebody offers you a scheme, check up with a few people, look up on it. So act wisely. And if all this you can't do on your own, you feel lost, come to the 4th A, which is AKPK, and then we see how we can help you here. So AKPK is always there, trying to help you to see, to get you back on your finances. Yeah. So analyze. So I think it all starts with the word of you wanting to improve your situation. So sometimes we do not know whether are we affected, not affected. So we are really worried about those who are eligible. We are worried that they are not ready to pay. We are worried that mentally, physically, or financially, they are not prepared. So that's hence why we are calling everybody. Please look at it now. But I would want to highlight something here at AKPK. We realized after we opened up in June, we have our secrets where people could actually print out their credit report. And what we saw was there was an increase of number of people coming to print out the report. And the increase was mainly printing out their secrets report. And mainly, majority of them shared the reason why they printed their report was they wanted to do a self-review, meaning they wanted to look at their situation, which we think is a very positive sign. So we hope that's the first step they take, and they're looking at their finances now. And the next step, they would know what is that for them to do. Yeah. So we hope more people will do that and relook at it.
Yeah, I think that's a really positive note there. Maybe one of the only positive notes there is that it's maybe gotten some people to take a look at their own finances and evaluate that. And printing out your secret score is probably a good way to get that started. Malek, I think we've got some questions up from Facebook there. Yep. Would you mind bringing them up?
Sure. So 2 questions. We'll do them back to back. First is from Colin Ng. And this is another interesting one. Would it be a good idea to keep your, you reduce your EPF contribution to 7% and then invest the rest of it into through IEPF, hoping to beat the typical, he says 6 to 6.5%, but really it's about 5%, right? Dividend yield by EPF. Can I pass this to Sam, please? Sam, would you say to Colin, yes, go ahead, take the differential between your 7% and your, I think 11%, right? And invest it in IEPF, or should Colin just go back up to the normal employee contribution rate?
Okay, so basically it is still back to where is your current situations. Yeah, you must know that either you are in the pay cut situation, if you have pay cut, then of course the reducing back to 7%, it will help you to increase in terms of your liquid in your income inflow, so that you can actually spend wisely in terms of your basic needs. So, but if let's say everything is back to normal, yeah, you don't have pay cuts, then our advice is you need to actually opt out on the reducing in terms of EPF contribution. You can actually back to the 11% contribution as well. Then in terms of the investment, what we advise is you need to really understand that what is your retirement funding needed. Let's say if you need to do the simulation, if without cash out your investment from EPF to do the unit trust investment, is there any different by using cash versus EPF investment? Yeah, so these are all the analysis you need to make it right in terms of the scenario planning before you make a wise decision to move on.
Yeah. I think at least the good news is that the default of 11% is not a bad thing. It's a good thing, and you get it's safer. Yeah. So if I think for Colin, to me, it depends whether this is excess cash or this is
Yeah.
something that, you know, for your retirement, do you need it? Do you need your cash urgently or not? If you don't, I think my suggestion is just leave it in APF, right? I mean, just get your, do your 11% and put it in APF. That will earn you a decent return.
Yeah.
Not, you know, not the best market return ever, but a solid,
Yeah.
dependable return. So and the other question is from Viv Adram, and this is a question for Nirmala. If an individual was out of a job, not because, even since pre-MCO, right? Not because of like retrench or anything like that, but because of a health issue, and they're working freelance right now. Is there, and they're having problems trying to figure out how to, you know, how to make their meet their expenses with their freelance job, with a health problem. Is there any way AKPK could help or advise them? Nirmala?
Malek, yeah, please come to AKPK. We are not limited to the affected, non-affected. As long as we have two parts of AKPK. One is on the financial education, financial counseling. So if you do not have that problem, but you really want to know how you can actually manage your finances, and with the health problem, how do you manage, you can still come for financial counseling. We would help you to look at your budget, and also if there is that problem, we'll help you to see how we can restructure it so that it's in an affordable thing. So our main, our key thing here is we are looking for affordability. So we want them to be able to pay up.
Right. That's it from me, Roshan, on the Facebook side.
Right, Sam. So we're not right now in the area of uncertainty. Many people are maybe not sure whether they're going to have jobs in a few months' time. So you've got to really be aware of that. And what's your advice here in terms of preparation for this? I know we're talking about, being frugal is one thing, and managing your income and expenses. Beyond the other points that we've touched on so far, is there anything else you would particularly address to this group?
Yeah, recent experience, I noticed that because of this pandemic, the financial behaviors and awareness have changed. Like example, when I meet up with them, they were asking me about how can I put aside for educations for themselves, to upskill, to prepare for the worst. Like example, currently I am in this media industry. I foresee that if the economy is getting worse, then it may affect my current situations, my job. So what are the new courses, the new skills that I would like to pick up in order to prepare for the worst? So this is one of the behavior that I noticed there is a changes. And in terms of another part that I found out, that they started to have awareness in terms of how can I save more? How can I save more? Compare with last time, that how can I spend more? So these are all the different language that I noticed from them. Yeah. So with that, I would encourage to do a preparation. Just upskill yourself, just in case your industry has been affected. What are the immediate others industry that you can actually work on? I also heard another good news is during the MCO, a lot of people got pay cut, but there is a technology company that have declared bonuses and also have increment on that during March and April month. Yeah, so these are all the good news that we would like to share with everybody. Then what are the actions that they need to do with this increment and bonuses? Please put aside, get your emergency funding right, and get your liquid asset right, just in case something bad's happened again. Yeah. Okay.
I think as we approach, I think we're in the last 10 minutes right now. I want to touch on the more desperate situations, because there are people who are facing significant hardship, and really it's not a matter of no job, the expenses are still there. Maybe they're not eligible for the moratorium, or it's just not enough. They're in over their heads. I think from this conversation, we understand that AKPK is an option no matter where you are in that situation. If you are just beginning to see a problem, go and talk to AKPK. If you are in the problem, go and talk to AKPK. Towards the end of it, go and talk to AKPK. You know, that's something to not be afraid or ashamed of if you're in financial trouble. Just admit it, acknowledge it and address it. But one of the things that I think this was brought up in Parliament last week, bankruptcy, the bankruptcy protection. This is something that was brought up. And Nirmala, could you just take us through this? What does it mean to be, what does personal bankruptcy mean in Malaysia? I think that right now it's a 50,000 ringgit threshold, correct?
It's 50,000. So bankruptcy is a process where a debtor is declared a bankrupt pursuant to made by High Court against the debtor if he is unable to pay his debt of at least 50,000 ringgit. Yeah. So there is, for example, he has taken loans and he could not pay up. So based on the, and the bank has actually initiated legal proceeding against him. So, and the judgment, they could actually declare him as a bankrupt. Yeah. So being a bankrupt, there are two ways. It's either you go by creditor's petition, where the creditors actually proceed to declare bankrupt, or a borrower can also self-declare a debtor's petition. So the borrower himself wants to declare them as, himself as a bankrupt, so he can actually go. So this is actually the last resort, we would say. When a person is definitely in no means to pay, there's no income, the debts are overwhelming, just need time. But it's actually a temporary solution. So I'm trying to regain, because you will still pay back. What will happen is once a person is declared bankrupt, so now he will report to insolvency. They'll have a file, and then they will interview. They will look into whatever assets he have, what are the other owings he have, what are the assets that they can actually liquidize to sell and pay back their loans, settle their loans. So they will look, and over a period, as he stays in as a bankrupt, he can actually pay up slowly, make an arrangement with insolvency, and then eventually come up to a settlement and be discharged from a bankrupt. So it's not a life sentence. It's a temporary solution for some people who are really in problem. And while they are bankrupt, of course, there are some restrictions. They can't travel overseas without the permission of the Director General of Insolvency's office. Most of their current accounts, savings accounts will be freezed, but if they're working, they're employed, there will be one that they will be allowed, but it will have to be done through the insolvency department. Their assets all will be seized, frozen, yeah, and basically they can't be a director for a company. So there are certain limitations, but it's definitely, I would just want to highlight, because you mentioned loan sharks earlier, it's definitely better than that. So please, because at AKPK, we have seen cases where they have default their housing loan and the house is going for auction. They're so desperate that they want to save the house. They go to the loan shark. So they have created two different loans here now. Another loan when they can't even pay this. So these are the situation when people are actually desperate. They don't really think, probably they can't make a wise decision, and they just go for the best immediate solution, which is actually putting them into deeper problems. So that's why sometimes when people come to AKPK, we say, in fact, at times we know this case is the amount owing is too high for them to settle. So at times bankruptcy may be the only option there. Yeah? So it's what we are trying to say. It's not the end. Yeah? There is a way out of it. It's just
it's for 3 years, right? There's an automatic discharge after 3 years.
Yes, but it's not like automatically you'll be discharged. You have to apply. There are certain conditions if you have met. For example, you have paid according a certain amount up to what has been agreed. They have, and then you have been in communication with the insolvency department as and when. So you have to have a good track record with them, yeah. So then you can apply, and it's automatic discharge. So it's not like immediately everybody comes 3 years they get automatic. No, it doesn't work that way.
All right, Sam, do you have, before we wrap up this session, this BFM Personal Finance webinar, do you have anything to add to Nirmala's points over there?
Yeah, in fact, bankruptcy is not the end of everything. I have a real case that, in fact, there are two types of loan. One is legal loans, another one is loan shark. So in fact, loan shark is also, you can work like a AKPK. Sorry to say that. You have to face it, like what Nirmala said, you have to acknowledge it and meet up with loan shark. Then you set a ground rules or negotiate with them that if I am meeting up with you today with the agreement, the interest will stop to calculate, continue to calculate by today, then by which date that I will make a payment on that. So this is another way of they are allowed for negotiation because of at the end of the day, the outcome is they want the money back. Am I right? So these are the experience that I observe it and experience it by myself when I assisting one of the relative. Yeah. So we meet up with about 14 loan shark on that. But each of everyone agreed to stop to calculate the interest immediately with the proposed payment and proposed date that proposed by the relative. So this is the first actions that we have already stopped the ball rolling in the first place. Then only we find the second option is what are the current asset that this person have, in order for us to be able to find out that if I have this loan amount need to pay, this is my asset, what is my gap? So the gap, then the relative need to actually find a solution from relative, from friends, or the worst is actually they get a relative to get a personal loan to cover all this. So every solution, every problem there is a solution. But what we need to highlight to everyone is you need to face it. Yeah. So but the overall advice is don't go to the worst lah. Always go to AKPK is the immediate sources that they can help you to reducing your stress and give you some peace of mind and prolong the terms of the payment in terms of legal loan repayment. Yeah.
Okay. And actually, if you want to learn more about bankruptcy, I had a similar conversation with Nirmala last week on Ringgit and Sense, the radio side of Ringgit and Sense anyway. And you can search that up on the BFM app or Spotify. Just search AKPK or look up Ringgit and Sense. Malek, we're just about to wrap up now. Is there anything you'd like to end on?
I think we need to do a show with loan sharks. And just kind of like see whether they're nice people or not so nice people, or is they're nice but they employ thugs. That's
don't get the wrong perception of their face expression. Some
really?
You look at it, they are like very garang, but in fact they are very good person. But some looks like very good person, but in fact they can't negotiate. So you just need to face it. Yeah.
So we know we have a loan shark expert, Roshan.
Definitely something I should cover on Ringgit and Sense at some point soon. But on that note, thank you to the three of you for joining me today. It's been an hour just flew by like that. Thank you so much.
Yeah. Thank you.
Thank you for having us.
Thank you.
And thank you all for joining me today. I was speaking with Nirmala Subramaniam of AKPK, Samantha Yeoh of Vantage Advisory, and Malek Ali, founder of BFM Radio and filife, on this edition of the BFM Personal Finance webinar in collaboration with the Financial Planning Association of Malaysia.